Sensex down 400 points, Nifty down greater than 120. Any sign of recovery, any sign of 10-15 point gain coming in on the market, and you see an extended sell-off coming in. And it's likely so because people would have got stuck in the last 2-3 days. Banking stocks are taking a big hit. So whether it's a IndusInd Bank, whether it's a Yes Banks, PSU banks which rallied at the start of this week, all of them are taking a decently big hit. It's led by the currency. It's also led by the risk of trade that's happening in. Vaibhav Agarwal, banking analyst at Angel Broking, now joins us. Good morning, Vaibhav. What essentially is happening in the private sector banking names like Yes Bank, IndusInd, you generally don't see such sharp sell-off over there?
Well, clearly a part of the reason would have to be attributed to the, anticipated weakness in the currency because of what is happening, in China and, other external factors. And ultimately all these private banks are, very highly FII owned as well. So, the correction that we are seeing, to that extent, it is slightly more accentuated right now in the private banks as well.
You think it will continue for a while till the time currency stabilizes?
Well, yeah, I mean, in the near term, one cannot rule out, more correction, especially within the private space as well. Let's say a Yes Bank would be a slightly higher beta stock, so it may see a little more correction. But,
I think there is some issue with the link. We'll just sort it out. By the time, what he was trying to say is that high beta private names like Yes Bank, Axis Bank, which essentially have a lot of FII holding, will tend to see some bit of selling pressure, which may be accentuated. If we look at Yes Bank, I just want to point out Yes Bank has been one of the top losers. It was the top Nifty loser yesterday. It was down about 7%, and right now it's down 4%. It's among the top losers, so it's lost 12% in the last 2 days. Vaibhav Agarwal is with us. Vaibhav, can you continue your point? Why would high beta like Yes and some of the others lose more?
So, like I was mentioning, within the private banks, the slightly higher beta ones like Yes Bank may continue to see some more correction as well. We've seen it in the past as well. When there is a correction, the slightly smaller private banks with the slightly higher beta tend to see more correction. But the fundamentals remain strong for the private sector space in general. And, one can actually use this opportunity to, get into these stocks if one had missed the earlier rally. Especially now, even the higher quality names like HDFC Bank itself are looking like a buy to us. So in the initial phase, we would recommend buying on dips for an Axis and an HDFC Bank itself. And, then probably wait for some more correction. And at that level, maybe even a Yes Bank would once again start looking like a very attractive bet.
Right. It would be a buy into Yes Bank at 690 level, or you would wait for some more correction because the global sell-off probably has just started. It's just like 36 hours old.
Exactly. So, so that's what I mean, that even if one has to do some bit of, buying on dips, one can start looking at the much higher quality, lower beta names like HDFC Bank right now. And, because even that is looking attractive on valuation and fundamentals. And maybe wait for some more correction and let this entire correction play out, before looking at a Yes Bank. Fundamentally, that stock is also, a buy for us. But, at this point, it may see more correction due to its high beta nature. And so we would recommend waiting for it to play out before entering into it.
You started by saying that private sector banks are still continue to be the best place. We just had a guest earlier who's a market expert, Ratnesh Kumar, and he told us that, for last 5 years, PSU versus private, in terms of PSU were written off, private were doing well. And now that may change selectively. Would you agree with that? If yes, what would be the PSU top picks that you would look at?
So in the PSU space, SBI is the one stock that we still have been, relatively, positive on. We have a target price of 310 on SBI because, it's not just what the government is doing, but at the same time, it is the largest, most diversified, loan book that SBI has. Valuation wise also it's decent, and capital adequacy remains strong, and even its profitability is improving over the last, 2-3 quarters. So, that is a stock one can look at. Other than that, in the PSU space, PNB is a stock which is on our radar, but we feel that there could be another quarter or two of pain because the underlying sectors to which banks have lent, like metals, etc., remain under stress. At some point, we do foresee over the next 1 or 2 quarters, that even a PNB could start looking interesting. Again, it has good capital adequacy and is trading at a discount to other larger peers. But some of the remaining, PSU banks like Bank of Baroda or BOI or Union Bank, these are still to us, at their current valuations, are not really attractive to us in spite of what the government has done for the space so far. We are not really finding them to be, good enough buyers at this point.
Names like Bank of Baroda, Canara Bank have got a private sector chief coming in as a manager. Do you think that a big write-off or a big cleanup in the next 2-3 quarters may continue for these names, despite the market, being excited about the new chief there?
It is quite possible. I mean, it cannot be ruled out. And, at the end of the day, if you look at the loan mix of, even these banks, if you look at Bank of Baroda, it does have a lot of exposure to the metal sector, out of its total exposure. Canara Bank, again, has a lot of exposure to power and infrastructure. So, these banks have also lent just as much to, many of these stressed sectors. And, there could be more pain that might come out. And at the same time, in valuation terms, in our view, they've, to an extent, slightly unreasonably gone up to quite a bit of a premium to the other larger PSU banks, like PNB, for instance, that I mentioned. I mean, that kind of a premium in our view is not justified because of the change that has happened. These changes would take years to really start reflecting in a fundamental improvement in their processes, etc. And in our view, these stocks may have gone up slightly ahead of their fundamentals.
Right. A last word on NBFC, especially the housing finance companies, names like LIC Housing Finance, some of the others. Do you think they are still better placed than some of the banks that we spoke about?
Well, LIC Housing is also a buy for us. Ultimately, the structural story for mortgage continues to play out. And, if interest rates, which we believe, are headed further downwards, that would also help these companies, in terms of valuation.
Right. I think we have the issue with that link. But he was saying that he was liking LIC Housing Finance and some of the other NBFC. On that note, let's take a quick break. Market continues to be down. Nifty closer to the 8,240.